Hi, I'm Ed Schmitz, and I'm a partner here at Hansman Weeble. We've been getting financial reporting questions related to COVID-19. This question is about PPP loans. How do we record the Paycheck Protection Program, or PPP, loan proceeds, and the possible subsequent forgiveness of that loan? A forgivable loan is just not something companies typically deal with. Nonprofit organizations sometimes do run into these transactions. Let's look at the available accounting alternatives. Business entities have 4 accounting alternatives to choose from. They can treat the PPP loan as debt, or by analogizing to other parts of US GAAP or other accounting frameworks, as a conditional grant under FASB ASC 958, as a government grant under IAS 20, or as a gain contingency under FASB ASC 450-30. If a business entity doesn't have an accounting policy to account for this type of transaction as a conditional grant, a government grant, or as a gain contingency, management is going to have to create that accounting policy. Nonprofit organizations only have 2 accounting alternatives to choose from, as debt or as a conditional grant. If the PPP loan is treated as debt, the proceeds and accrued interest are recorded like any other loan. When the loan is legally forgiven by the bank, the note payable and accrued interest are reduced on the balance sheet and other income is recorded. This alternative is acceptable whether or not the organization believes at the outset that the loan will ultimately be forgiven. If the PPP loan is treated as a conditional grant under FASB ASC 958, the loan proceeds are recorded as a refundable advance liability. Accrued interest would only be recorded for the portion of the PPP loan that the organization expects to repay. The advance liability is reduced on the balance sheet as the qualifying expenses are incurred, or in other words, when the conditions for forgiveness are substantially met. The other side of this entry is other income or grant income. If the PPP loan is treated as a government grant under the International Accounting Standards, specifically IAS 20, the loan proceeds are recorded as deferred income. The deferred income liability is reduced on the balance sheet on a systematic basis as the qualifying expenses are incurred for which the grant was intended to compensate, when management believes that there is reasonable assurance the debt will be forgiven. The other side of this entry is other income or government grant income, or as a reduction of the related expenses. This is different than FASB ASC 958. If the PPP loan is accounted for as a gain contingency, the loan proceeds are recorded as a liability on the balance sheet and reclassified to income once all uncertainties regarding the final loan forgiveness have been resolved. Thank you for watching this short video. If you need further assistance, our contact information is shown here.